So that's a brief overview of the taxation position in South Africa. Again, we're going to be talking about, Nikki's going to be chatting about living in Mauritius. And that begs the question of what happens from a South African point of view. So immigration from South Africa is really addressed in two aspects of the legislation. The first is the tax legislation, and the second is the exchange control legislation. So the first aspect I want to address is the tax immigration aspects. I mentioned during the first part of the presentation that South African tax residents are subject to tax on their worldwide earnings and their worldwide capital gains, and the fact that you merely pack up and leave South Africa, unless you formally emigrate from South Africa, that your tax obligations to South Africa remain in place until such time that you immigrate from a tax point of view. Now, the effect of immigration from a tax point of view is that you are giving up tax residency. And from a tax point of view, what happens then, you are deemed to have disposed of all your assets and immediately reacquire those assets at market value. And the effect of that is the difference between the market value when you deem to reacquire them and the original cost, the base cost. The difference between that triggers a capital gain, and it's colloquially known as the Xattacks. So you trigger a capital gains tax liability on giving up your South African tax residency. It's effectively the last bite of the cherry that the South Africa has on its immigrating residents. As I mentioned, the top tax rate for capital gains tax in South Africa is an effective rate of 18%. And the question is, if I if I leave South Africa to take up residency somewhere else, the next question is, do I immigrate from a tax point of view? If I don't immigrate from a tax point of view, I won't trigger the so-called Xattacks, the 18%, up to 18% capital gains tax. But the downside of that, that person will be subject to tax in South Africa forever and a day on their worldwide earnings and their worldwide capital gains. After becoming resident in Mauritius for a period of 3 years, there's a fair chance that you will then be considered tax resident in Mauritius, and at that point in time, SARS may take the view that you have immigrated at that point in time and trigger and then impose the capital gains tax on you. However, highly unlikely, because they wish to retain their tax residents or retain all their tax residents to ensure that they continue to earn or continue to recover the income tax and the capital gains tax that is paid by South African tax residents. One of the exceptions to the deemed exit rule, i.e. when you acquire the asset, when you deem to have disposed of all your South African, all of your worldwide assets and immediately reacquired them, is immovable property that is directly held by a South African tax resident. The reason for that is that non-residents are not subject to tax in South Africa, but residents are. But a non-resident is subject to tax in South Africa at the time they dispose of immovable property in South Africa. So hence, because there will be a capital gains tax at the time the immovable property is disposed in South Africa, there's no deeming provision, and hence the CGT will be levied at the time of immigration. And in order to ensure that the tax is collected, given the fact that the person is no longer present in South Africa, South Africa imposes a withholding tax on that sale, which is a advanced tax of the potential future CGT liability in respect of the sale of that immovable property. Again, the decision is whether you should tax emigrate or whether you should remain tax resident in South Africa, in very, very few circumstances, or if any, have I ever advocated to my clients that they remain tax residents in South Africa. And the view is that if they intend leaving South Africa, to emigrate from a tax point of view and to pay the exit tax. We mentioned at the bottom of the slide that you don't need a tax clearance certificate to cease to be a South African tax resident. The manner in which this disclosure made is on the tax return on the IT12, and that there's a question if the question is posed is, did you cease to be tax resident in South Africa during the year of assessment? If that is answered yes, the IT12 return then populates itself with the capital gains.